Welcome, everyone, to the Information's TITB. My name is Akash Pasricha. It is Friday, February 13th. It has been a volatile week in the markets, with AI fears fueling sell-offs across the market, hitting software, wealth management, real estate, and logistics stocks. Pinterest shares are also tumbling after the company reported its slowest quarterly revenue growth rate in 2 years. Today on the show, we are kicking off with our editor's cut. We are breaking down the bold bets that Silicon Valley is making right now and unpacking how close technology like orbital data centers and humanoid robots are to becoming a reality. I'll then speak to the CEO of Arena, formerly known as LM Arena, about the current state of AI benchmarking and whether today's model rankings actually reflect real-world performance. Finally, we will wrap the show with our AI and finance reporter, who has two major stories to unpack: a $7.6 billion payout to Groq shareholders, and this weekend's big read on Blue Owl Capital, one of the key financiers behind the massive data center buildouts powering the AI boom. It's going to be a fun show, so let's get right on into it. There has been a lot of conversation lately about the far-off bets that will take Silicon Valley into the next era of technology. Orbital data centers and humanoid robots, for example, have seen some good progress. But based on where we are today, it will still be a while before these tools can become a commercial reality. This week on the Editor's Cut, I want to bring on Martin Peers and Nick Wingfield to help us put some of those bets into context. Martin and Nick, welcome back to the show. It's great to have you here.
Hey, Akash. Thanks for having us.
Nick, I want to start with you. So you have written about some of these far-off bets for our weekend magazine. Tell us a little bit about what your observations have been about how the dialogue has changed around them recently.
Well, if we're talking about orbital data centers, the real reason that this has been thrust to the into the kind of public discourse is the SpaceX IPO. I mean, it's pretty straightforward. This is an IPO that is expected to happen in the second half of this year. The company has said, Elon Musk has said, and it's become a major plank of the SpaceX story, and one that I think we're going to increasingly hear from Elon Musk. Now, there are a variety of reasons for it. One of which, if you listen to Elon Musk, he'll talk about kind of sort of 24/7 free power from the sun. There are other benefits. There's another thing that I think also we're starting to hear more about, which is really the difficulty of building these kind of multi-gigawatt data centers on Earth. And so, in effect, NIMBYism, people who don't want data centers in their backyard on planet Earth, may be driving some of the dialogue that we're hearing about putting data centers in space.
But Nick, have there been any major breakthroughs at all lately in the last couple of months? And we know the narrative has changed and SpaceX has brought it to the forefront, but has anything changed around our capability to actually commercialize or build or launch this technology?
The biggest change is with with the transportation to orbit. So SpaceX has now successfully tested their large Starship rocket multiple times, and that rocket is critical for lowering the cost of getting kilograms to space. And you really need that kind of capacity in order to deliver the kind of the number of satellites that are going to be required for these orbital data centers to work. So that's critical. There have been some other tests that I don't think have really demonstrated that you can do these data centers at scale in orbit. And we've also seen, some research from Google, which is interested in this type of technology as well. But really, nothing that has proved beyond a shadow of a doubt that orbital data centers can function in orbit.
So, Martin, if Elon wasn't behind these particular bets, you think they would be in the headlines at all?
Sure. I mean, I think Nick actually wrote a story about this a couple of years ago, right, Nick? Well before Elon sort of embraced this. I do think, though, we should step back and look at what's really going on here. Really, Elon has become used to being the center of the tech world, right? He gets an enormous amount of attention, much of which he drives, by putting out these ridiculous announcements. Um, And a couple of years ago, his position began to be threatened because OpenAI was suddenly getting all the attention. So Elon, who had been involved with OpenAI from the beginning, but then had had a falling out, Elon starts his own company. But unlike OpenAI, which has raised a huge amount of money from various people, Elon hasn't got the money to fund OpenAI as much as he needs. So what does he do? He creates this ridiculous thesis about sending data centers into space, justifies merging xAI into SpaceX on that thesis, which really doesn't make any sense at all. And now we're all sort of talking about it. It's crazy. This is really all about Elon and his ego and his desire to be in the middle of the whole debate. Um, I think in the end, Elon will not be the main mover in AI, and the people who are investing in the SpaceX-xAI IPO are going to be disappointed.
So, Nick, one of the questions I had for you was, look, when the internet was being developed in the 90s, was this how people
Back in the
talked?
dark ages, when Nick was a young lad.
Okay, well, maybe Martin, if you want to
No,
admit to
Nick's
being
older
old,
than I am, so he's
I was gonna say, I was like, Martin, I was going to Nick to be courteous to you, but you could jump in.
no.
Uh, so, look, my question really is: isn't this the way you have to talk about these moonshot bets to get any kind of attention, fundraising, traction about it at all? I mean, what is the alternative? I guess.
Well, we used to talk about things like this back in the '90s as vaporware, and you would announce. Then the moonshots weren't orbital data centers. It was the next version of Microsoft Office or a database or something like that. But very often companies would talk about these sort of far out products. But those really were, I would say, a lot more achievable. And the logical leap to get to those next versions of the product that didn't really exist weren't as great as the ones that we're seeing right now. Which is not to say orbital data centers will never work, or that robo taxis from Tesla, at least, will never work, or Optimus. I mean, they probably will. It's kind of a question of the time horizon. And so, like, do you need to talk about this? I think you do need to talk about this now if you want to tell a story to investors, and that's largely what this is about. I don't think, and maybe it's also partly to spook the market, in competition, because you really can have a broader impact if you start to talk about these things well in advance of when they're ready.
So, Martin, what about from the investor's perspective here? I'm trying to think here, what could have changed in the last 25 years? I mean, people talk about where investors, what asset classes they look for returns that exceed what the market is giving them, and we've seen the venture capital industry kind of grow over time. And I'm just trying to think openly about
Well,
this. I mean, could part of this be that I mean, you have to take on more risk today. You have to sort of make bigger
no,
bets.
I think what has changed, I mean, obviously many things have changed, but I think a big thing is that this focus on individuals, this sort of blind belief in individuals. I mean, we see it in the political arena and we see it in the business arena. And Elon has created this sort of image of himself because he's had success with SpaceX and then Tesla as this just, visionary that people will just they have put blind belief in what he says. But if you actually watch what he says, he's constantly wrong. And I just think people need to be a little bit more skeptical of some of the more outlandish things that he says. And particularly if you watch him on X, he says the most outrageous, extraordinary, bizarre things. I think his success has really gone to his head, and he just now he's like, believes anything. He's kind of like believing his own BS, kind of thing.
Nick, what do you think could change this in the end? How could this narrative shift going forward? Is it a business going wrong, a technology not panning out, investors getting sick of it?
I don't it's hard to imagine Musk being more wrong about orbital data centers than has been about fully autonomous Teslas. I mean, he's been promising that now for years and constantly missing deadlines. And I mean, depending on how you view the potential repercussions from that. I mean, Tesla's stock certainly has suffered, but for a long time it hadn't. I think this is just built into the bloodstream of the tech industry. I mean, we haven't even talked about it, but there are some non-Elon players out there who are also making some really bold promises about what AI can do, about what agents can do, that agents are going to kill software as we know it, and none of us really know if that's going to happen. And will they pay the consequences of those types of predictions? It's hard to say. It certainly seems like there's not been a huge penalty for Musk, but he may be a unique case.
I mean, I would say that on that point, the fears about AI hurting, Salesforce or servers now, you can understand where that's actually coming from, and that might eventually end up happening. It's just that there might be a different. It's just a question of the actual time frame. But Elon, I mean, he is the one who's been saying these most ridiculous things about AI that people won't live in poverty anymore. Healthcare will become magical. I mean, the guy's like smoking. I mean, he's obviously, he's on something because you can't believe anything he says, really. I think it's just, fiction.
Right. Okay. Well, Martin and Nick, I want to thank you for coming on. That is Martin Fears, our co-executive editor, and Nick Wingfield, our features editor here at The Information. Benchmarking has been very important to the story around AI models in recent years. Of course, there has also been a lot of conversation around benchmarks not actually reflecting how successful certain models will be in the real world. I want to bring on someone whose business is at the center of all of these discussions. Anastasios Angelopoulos is the co-founder and CEO of Arena, previously known as LM Arena. Anastasios, welcome to the show. It's great to have you here.
Thanks for having me on.
Tell us, what is Arena, formerly LM Arena?
Arena is a company dedicated towards measuring intelligence. So what we do is we run a benchmarking platform. It's a live evaluation, unlike any other evaluations, where real users, tens of millions of them, are coming to our site, arena.ai, using AI for their daily work tasks, whether they're doing software engineering or legal tasks, medical tasks, writing, and so on. And in so doing, they're giving us feedback that we use to construct a public leaderboard that's shaping the future of the AI industry.
So I think a lot of us will know Arena and LM Arena from that leaderboard that we've all been refreshing to see every time a new model comes out, who is on top in terms of text and video and audio and stuff like that. How do you actually make money?
The way we make money is by helping labs and enterprises evaluate models pre-release, or AI systems pre-release. So what happens is that during the course of developing a model, before, let's say, labs want to release it to the public, they might want to try it out on some users, to get the distribution of real world use and see how well they're doing and try to understand its strengths and weaknesses, know how to improve. Whether that be, hey, this model's not so good at math, and then they maybe go and collect more math data to try to improve it, or whether that's coding data, trying to understand where maybe it's making errors, maybe it's making code that doesn't compile, maybe not solving users' tasks. We help them understand this on the distribution of our real users through these cloaked models with these code names. That's a service that we offer to providers to help
So
them.
these are like the major AI labs, basically, are your customers.
Major AI labs and also enterprises, yes.
Okay.
You should
So
know, though, that the public leaderboard, the one that you see on arena.ai/leaderboard, never touches money.
Right.
Model providers cannot pay to be on the leaderboard. They can't pay to be off the leaderboard. They can't pay to change their score. And all public models are evaluated according to the same open source methodology that you can see on our GitHub. You can go to our Arena rank repo, and it shows you exactly how we take the public's votes, and we turn them into scores. This
Right.
procedure only applies to pre-release or cloaked models where providers are trying to sort of predict how well they would do if they were to release their model.
Got it. So this is, I mean, this is kind of like, the church and state sort of system you have to have here, which is that your B2B business, which is helping these AI labs assess their models pre-release. I mean, it sounds like that has to and is completely separate from once they are released, then you have another team or, another operation basically, which is allowing people to rank them. I mean, one cannot really talk to the other.
Well, I think the neutrality is driven by people's faith in our scientific rigor. We're all former academics. Myself, my co-founders Wei Lin and Jan, come from Berkeley, where we were running this project as PhD students. Well, Jan was our professor, but Wei Lin and I were PhD students at the time, and just thinking about, hey, how do we do this? Like, it was at the time of ChatGPT. And nobody really knew how to compare it to language models. You would put them on static benchmarks like, an MMLU or something, and it'd be like, oh, well, model A is better at taking the tests than model B, but then you put them in users' hands, like you try to chat with them, and it all, basically fails. It's like you can't talk to this model, and it's clearly so dumb. So what we did in order to fix that, and it wasn't just us, it was a large group of students at Berkeley, is create this arena type system that kind of became, the gold standard way that such chat systems are evaluated and has sort of propelled to this point. We remain very scientifically oriented. We continue to publish papers on our methodology.
Right.
Again, like with a very open source, system. And by the way, if you think about our incentives commercially, trust is at the center of it, because if any model provider starts feeling like, hey, these guys are not in the game to be neutral, and if it's not a neutral playing field, then the whole platform loses everything. So
Right.
I would say that's one of the incentives also keeping us neutral.
What do you see as the future of your business then in an environment where these models become a little more commoditized? And by that I mean, there's this whole discussion around right now today, the labs are all fighting with each other to have the best model, and every time a release comes out, everyone rushes to the benchmarks to see how they're performing. But look, there has been a discussion around 3, 4, 5 years from now, will the competitiveness start to converge a bit, and will you really differentiate yourself based on the application that is installed in a world where the models do come commoditized? And what is the future of your business?
Well, let's distinguish between two things. There's the models becoming commoditized, and then there's the space fragmenting. So models can become commoditized while the space also fragments. And by that, I mean the cost of sort of the margin of inference can be driven to zero. But at the same time, what can happen is that different providers and different, models are good at different things. And that's kind of the world that we see ourselves going towards. Cost of inference certainly going down. Um, a lot of these companies are talking about driving the cost of intelligence to zero, making sure that you can have like intelligence in your pocket. It's at essentially free cost, too cheap to meter, blah, blah, blah. But also, we're seeing that different providers are starting to specialize in different things. So as an example, like the consumer war is kind of being fought right now between ChatGPT and Gemini. But the enterprise war is certainly being, it's not necessarily being led by Anthropic in terms of dollars, but Anthropic is kind of positioning themselves there in the market and growing quite quickly. And so if you believe in a world where many flowers will bloom and there's a huge amount of space for AI to, capture dollars everywhere in the economy, then the natural incentive for these companies will be to sort of tile up the space and fragment. And in that kind of world, our business is actually quite valuable because we can solve that fragmentation problem for users. We can help
But
people
you don't
understand.
think all the models in the long run will sort of become, an Anthropic coding model against OpenAI's coding model, et cetera. I mean, right now the rivalry that we hear about is which company has the best model for the particular use case that you're talking about. I mean, my read on the discussions was that in the long run, the cost of inference will come down, as you're saying. Also, it won't really matter who has a better model because the differences will become marginal in some ways. It sounds like you're saying that you don't think that the differences will become
I
marginal.
don't think the differences will be marginal. It's difficult, part of the issue is that it's difficult to personalize to people's taste. And so all these models are going to have different tones. It'd be like saying humans will commoditize. It's like, yes, the models will become more and more intelligent. Okay, they might be, but there's not a one-dimensional axis called intelligence that these models are going to commoditize under. You go to different people and you like different people different amounts. It's like they might all be smart, but the way they talk to you, the way they present information, the particular set of skills that they have, are they more geared towards this or are they more geared towards that? Let's say I'm writing a scientific paper. Maybe I prefer the sort of way that the scientific paper is being written by one model versus another. Maybe one model has a more empirical taste. Maybe I find it to be more careful in experiments, whereas the other one maybe is more theoretical. It's just like these issues of taste are going to matter so much to the future of AI, and it's going to need likely human in the loop workflows. And by the way, expanding the platform that we have towards agents. So
Yeah,
going even beyond the model and
and
thinking about how
assessing
all of these
the
interact.
agents then, right?
Yeah, absolutely, and human
Th-
in the loop. And that's where our platform has a particular advantage because we have tens of millions of users here that want to use the most cutting edge agents to do their jobs.
So now on the human in the loop piece, and this is slightly different piece, but after the models are released, then we know that reinforcement learning and human feedback is becoming increasingly important to helping to tune these models. How does your business then fit into that story, and how do you sort of connect to that phenomenon?
Well, I think the story that we are seeing slowly play out in, all of the AI story is that every real environment is becoming an RL system, right? Whether that's Salesforce, whether that's Arena, whether that's, a little environment that an RL environment company makes and sells to a lab, um, or whether that's the real world via, a robot going around picking stuff up and seeing whether it can actually perform tasks. The purpose of Arena and the reason why it's such a valuable platform is because it represents real users. It is always live. By winning on the Arena, a model is able to predict the future because it's able to predict which answer a human will like better. It's able to give them what they want for a new user coming in with a new question. And ultimately, it's interacting with reality. And reality is impossible to game.
Right,
That
right.
is the future that I see, benchmarks moving away from these sort of static benchmarks where it's just a list of questions in a test, and then you see the test once and it's over. You've kind of memorized the answers, and towards a live platform where you're really measuring utility to real people, them in the loop doing their work with you.
Let me ask you one last question before you go, which is we see the models getting better and better, and we see them on the leaderboard as well, companies moving up and down. That is a very different story from AI adoption in the enterprise, which is a much slower moving story. What do you think are the core reasons that AI adoption hasn't taken off the way people would have hoped in the enterprise? And yet on your leaderboard, we see models getting better. I mean, they're getting so much better, right? We saw with 5.3, 4.6, they can do things they can't already do. Why?
Well, let's just, make one thing clear. Enterprise adoption, although sort of lagging behind consumer adoption, is not exactly slow. There's a lot of
S- uh,
enterprises that are
Maybe
adopting
compared to
AI.
what investors are hoping for.
Exactly. So, it's not like the ecosystem is like sluggish and, whatever. This is the fastest moving economic trend that I've certainly seen in my lifetime and probably that anybody has seen. And the models are really continuing to improve. The gains are substantial. We saw it, last week with Opus 4.6 that model has so substantial leap in coding performance and in general performance over the last generation of models from Anthropic. And um, so the purpose of this leaderboard, and so Okay. Why is enterprise adoption moving slowly? You can actually look at surveys of this, and the number one issues relate to reliability. It's, am I able to safely deploy this model? Am I able to, you know, predict how well it's going to do on my users? Am I able to upgrade it? Am I able to understand whether it's going to be compliant with all the rules that I have in place? And sort of, can I measure its performance and continually improve it on my users? These are a lot of questions that enterprises are asking, which is why enterprise evaluation, which is yet another area that I think Arena is positioned well to attack, is poised to be one of the most important problems of the enterprise adoption story.
Great. Well, Anastasios, I want to thank you for coming on. That is Anastasios Angelopoulos, CEO and co-founder of Arena here on TI TV. Shareholders of chip company Groq, which late last year signed a $20 billion licensing deal with NVIDIA, have finally started seeing some of that money flow back to them. Our AI and finance reporter Miles Kruppa had some great reporting on how much they are getting back, and he also wrote this weekend's big read about Blue Owl Capital, one of the biggest data center financiers around. I want to bring on Miles to talk about both of those pieces. Miles, welcome back to the show. It's great to have you here.
Thanks, Akash.
Let's start with Groq. So we know that the headline number, Christmas Eve 2025, was $20 billion. It was the big licensing deal that NVIDIA did. You had some reporting this week about how much of that money is actually coming back to investors and how that number breaks down. What did you find?
Yeah, so what we know so far, based on what Groq has told shareholders, is that Groq can expect to get about $17 billion in cash from NVIDIA over time through this licensing agreement. Now, that's going to happen apparently in 3 stages. And what happened this month is that shareholders got their first payout from the first phase of the licensing payments. So shareholders were told that 3/4 of their stock would be redeemed, and that would result in $7.6 billion in proceeds to them.
And I just, I mean, there's still questions here that we have, but the 20 billion, reconcile that with the $17 billion in cash. So the $3 billion hole here, I get that's still a question for us to where that money's going, who's getting it.
It's a bit of a question mark. I mean, we could speculate about some things that might sort of fill that hole. I mean, there could be potentially payments to some of the executives going to
Right.
NVIDIA. There could be other things, earnouts. Um, but from what we know so far, it's pretty clear that NVIDIA is preparing to pay Groq $17 billion
Right.
in licensing fees.
So now let's compare this to some of the other licensing deals that we've seen other big tech companies complete. And I want to look at this from the perspective of investors who put money in Groq, because you wrote this in our venture capital newsletter, Dealmaker. How does the return that they are posed to get from the Groq deal, how does that compare to how investors did in the Inflection deal or the Character AI deal?
Yeah, when you look at the sort of last round investors in these different companies, it's kind of in the middle, roughly in line with what others have gotten. Character was a 2.5x payout to its last round investors. Inflection AI, which went to Microsoft and kicked off this whole thing, was a 1.1x return for its last round investors. And here, investors in Groq's $750 million round last year, they're expected to get, a 2x on the price they paid for their shares. So, it's pretty much in line, and it's a decent outcome for sure, because that last round was only 3 months before this licensing deal. So it's a pretty quick return of cash to those investors.
What do we know about what is going to be left of Groq after this licensing deal is completed? I mean, we've heard about these shell companies that sort of remain. I presume there's some IP there that NVIDIA is not getting. Do we know what's happening with that?
Right. Well, so NVIDIA's license is non-exclusive. So Groq can go out and license that IP to other companies as well. And the other thing that Groq still has is this cloud platform they were building using their chips. So, that had some customers, I think tens of millions of dollars in revenue. Um, in my mind, probably the most likely buyer is some other chip company that will want to buy Grok basically to sort of lock up its technology so that no other chip companies other than Nvidia, of course, can have access to it. I guess the thinking goes if Nvidia found this, worth a $17 billion licensing payment, maybe there's something there. And maybe the best move for a rival would be just to sort of buy it to lock it up.
Right. Let's pivot to talking about your weekend big read that you wrote this week about Blue Owl Capital. Why is Blue Owl Capital so important to the AI story right now? And who are they even?
Yeah, they kind of came out of nowhere last year, or 2024 rather, and started doing some of the biggest data center deals in the US, especially. Everything from OpenAI's Stargate project in Abilene to Meta's massive data center in Louisiana. And they were willing to invest billions of dollars in these projects, not as a lender, but by owning the equity in these kinds of special purpose vehicles that are being set up for data centers. And so, they're shelling out a lot of money and they're willing to take the riskiest part of these deals, which is the equity. So they're doing something a little bit different than the rest of the market. And they're doing it, with pretty substantial speed and size.
And, kind of the part that is interesting about the Blue Owl story to me is that they are taking on a lot of the risk that the AI hyperscalers, the labs, companies like Meta, for example, are keeping off their balance sheet in some ways. And, you see it reflected in the stock price of the AI companies. I mean, they're all doing quite well from the AI boom, and yet Blue Owl Capital, I mean, their shares are down something like 50% over the past year, and so I wonder where that leaves Blue Owl Capital. I mean, you talked to the CEO or the co-founder. I mean, what were the questions you had for him about this?
Yeah, I really wanted to understand the financial calculus. And it turns out that the kinds of investments they're doing in data centers is following a playbook that Blue Owl had already sort of established in other contexts before in its real estate business. So they were already, doing similar deals with Amazon, for instance, for Amazon distribution centers. And the way they structure them, they actually get regular payments on their equity. And in these data center deals, it's very, very hard for a tenant like Microsoft or Oracle to walk away before their 15-year lease is up. And so there are all these sort of mitigating factors that I understood better after the interview that, you know, make these equity investments a little bit less risky than they might seem on the surface.
And did that surprise you? Like, what surprised you about the conversation that you had with him?
Yeah, I mean, his bullishness, I think you can kind of get a sense of it from the earnings calls. But, he really, I think, sincerely believes that there's a huge arbitrage here, as, people in finance would say, that basically this is a once in a moment opportunity to basically lend money to these huge tech companies at above market returns. And I don't think I quite appreciated that until I talked to Mark. And also, yeah, just all the ways that they're kind of de-risking the investments. I don't think I quite appreciated until we sat down. That said, they are taking a bet on, that some riskier companies like Crusoe, Oracle, CoreWeave, that they're going to be around in over a decade to pay their bills and finish these projects. And if that doesn't happen, they'll be left sort of trying to find somebody to fill their place. So, um, you know, it's balancing those risks. And I think it was interesting to hear how Mark thought about that.
So after reporting this story and studying the data center financing story at large, I wonder if you left any more or less confident in the in the capacity for a company like Blue Owl to really stay the course, for all these data financiers to really come out on top. We've had people on the show talking about, well, there will be some pain in the short term, maybe, before things get better. And I think they have really been talking about the data center companies, the data center financiers, and without actually pointing to them specifically. Did you come out more confident in the story?
Um, I think actually, since I started doing the story, you've probably only seen an increase in the number of players looking to do the kind of thing that Blue Owl is doing. And so there's now kind of increased competition for these really huge deals. And that's
So it's
probably going to
harder. It's
push
harder.
terms down. Yeah.
Hmm. Okay. And so I guess you just, looking ahead here, what are the big questions that you have? What are the next, without telling us exactly, what are the trends that you're hoping to uncover on your beat in this story?
Yeah, I mean, I still think the debt markets are going to be super key. Blue Owl's had pretty good success raising debt for these projects, and that's 80 or 90% of the costs on top of the equity. Um, as we've seen from some of these recent issuances, there seems to be a lot of appetite in the debt markets for anything tech and AI infrastructure. Spreads, as they call it, are pretty tight. I think things seem almost a little bit priced to perfection now in the bond market. And so I think a lot of people are sort of holding their breath and waiting for a bit of a reversal. Or if there's some story, some crack in the data center story that's going to make lenders a bit more nervous because ultimately, these people are concerned with not losing money. So I think maybe that's one underappreciated aspect, which is key to what Blue Owl is doing, is that they have to go out and raise all this debt on top of their equity. And so far, they've been pretty successful. But if there's a sign that the path is getting more difficult ahead, that could affect their appetite to keep investing this kind of equity.
Great. Well, Miles, I want to thank you for coming on. That is Miles Kruppa, our AI and finance reporter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. We are off this Monday for the long weekend, but we will be back on Tuesday. We will see you then. Have a great long weekend. Bye-bye for now.